Country roads take me home to the place I belong. West Virginia Mountain Highway. Well, hello. We're going to reverse engineer targets and find us where the country road takes us. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the vocal talent that is the Scruffy Trader. It must be so because it says so right there. And I've got me coffee, so it must be coffee time with Scruff, because we all know Scruffy likes a coffee, and he certainly does. It's been a funny old week this week. It's been a good week. Plans are coming into play and money's being made, all that sort of thing, and life's pretty good. But what am I banging on about? Well, on a Saturday afternoon I like to kind of reflect the week, have a cup of coffee, and just have a little bit of a rant into the camera, tell you my thoughts, but also give you something to think about for your own thoughts. And this week it's about reverse engineering targets, and it's all running on from the foundation trading that I've been doing. Basically, that's a set of videos for you guys to have reference points. And why not? It's a simple answer. It just seems to be a good idea, and it might give some interest to the channel because it's not doing very well at the minute, and hopefully it'll ignite enough that you will make some money yourself. You see, I have a mega hatred of signals and things like that. I think they are fool's gold and a total waste of time. And why is that? Well, it's because there's no planning involved in signals, so you don't actually know what you're doing. And if the signal provider isn't there anymore, and that's assuming they were any good in the first place, you're left high and dry. And the other side of it is, what one platform's showing is not necessarily what another platform is showing, because they are market makers. You're not direct access to the market. You're taking a mirror vision of it based on your broker's interpretation of the data. Now, it'll be pretty close, but it won't be peg accurate. It might be a couple of pips out one way or the other. And that, as we're about to see, can be a difference. But also human nature. We all look at the charts in different ways. Friday, for argument's sake. Certainly I hope some of the scruffs will come to this, and as I do with the entire video actually, because there's a few things that I would like them to comment on. But on Friday, everybody's selling cable. I bought it, and I made quite a lot of money from it. In fact, I did incredibly well from it, and I'll show you it on the Rags and Riches in a minute. Why? Because I had a conviction, and I stuck with it, and I knew what I was doing. And that's the other side of trading, knowing what you're doing. You can be a contrarian, go against the grain, and still make as much money as somebody who hasn't really got a clue what they're doing, but they happen to hit unlucky. There is a difference between the two, and we're about to go through that. All right, so let me fire up the screens, and I'll kind of break down targeting and why am I doing this. Right, okay. Kind of a bit of a rant, I suppose. I spoke to a number of guys over the last month or so, because I'm quite happy. If somebody emails me or contacts me, I'll always respond, even if it's not the answer you want, because many times I just get, I'm struggling with trading, I need a strategy. you're always going to struggle with trading because you haven't got a clue what you're looking at. Why? Because you're not prepared to put the work in. You just want somebody to click the mouse for you or say, get in here and get out there. Mechanical systems don't work. If they did, all you would ever have is a computer plugged into the matrix and you won't have any human interaction with the markets. Well, unfortunately, that doesn't happen. So that, by definition, tells you that mechanical systems don't work. You have to be intuitive. You have to understand and know what you're looking at. All right. It's not to say that strategies are not there, because they are. The difference is it's how to read the conditions and apply the right strategy at the right time, but also understand how that strategy works and how you can adapt it and use it as a framework. All these different things. And that's kind of why when you're day trading, it's the human brain will always win out. If you're an algo trader and you look at some of the algorithms that are mechanical, they're based on daily time frames, because there it kind of does work. Because when a moving average crosses on a daily, say the golden cross system, which a lot of institutes look at, that works because it will stay like that for a long period of time. But if you're doing it on, say, a 15-minute chart, you'll get ripped to shreds.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
Because the markets are oscillating like this. Kind of how I worked with cable yesterday. Anyway, sorry, getting off on one. Need my coffee, guys. It's Saturday. Need my coffee. So let's have a look. See what we're talking about. Now, I'm going to show you something just to add a bit of weight to what I'm talking about. You see, I watch videos over and over. Well, I don't watch that many anymore, to be honest, because I got a bit sick of them. And I don't use any forums anywhere. I used to, but I was sick of being slagged off from one thing and another by people who, well, let's be honest, probably still believe the earth is flat.
There are people who believe the earth is flat. The documentary is called Assholes.
You know, people who think the moon landings was fake. The morons.
We are in trouble as a species if people refuse to believe in things that they couldn't actually do themselves.
They genuinely are. I mean, we had one this week, and he's been around for a while, this dick. And because he doesn't understand the argument, he just resorts to insults. And this week he was insulting Winky, which I thought was a step too far. And I'd love for him to come and say that sort of thing standing in front of me. Because trust me, I think the conversation will go a lot different. Anyway, that's a story for another day. But what it does prove is that these people will never be traders. Why? Because trading is a professional career. And like any professional career, you need to learn it. And if you are to be deemed a professional, you need to actually understand it and be able to show you understand it. And that's why you get paid, you know. Now, why have I got the 5%ers on the screen? Because I run a number of funds for these guys. And as I'm talking about these YouTube videos, you see how many of them are about to show you what I show you. Not many. And there's another part of that. Because even in the Scruffy squad, they'll say, oh, will you look at this for me? And it mightn't necessarily be on my radar, but I will look at it. Not only will I break it down for them, I'll put my money where my mouth is in the moment, and I'll trade it off my analysis of what I'm looking at. And it's always in the moment. So when you see these videos, just ask them, say, I want you to trade now, this market, this direction. See if they'll do it. I will. And I have done it. You know, case in point. Guy there, he asked me to look at the euro pound. So there's his markups. Is he right? Said, no problem. I'll break it down for you. Not only did I break it down, I traded it for them. And it was done within a few minutes of him asking me to do it. Why? Because I genuinely want to show them the way. And I touched on about yesterday pulling out money from cable. Now this is the guys doing very well, putting their figures up, which is really good. There you go. All of them buys. Boom, 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 boom. Did quite well. Go in the opposite direction. But I had a plan, stuck to my guns, and it paid me quite well. And I'm going to show you why and how that came to be just now. Now, I'll go back to the 5%ers because this is a third-party platform. Can't be manipulated in any way. What you see is what you get. And it's kind of an update that I said I was going to do anyway. It's getting on for the end of the month. So you'll get an idea of how much these things pay me for just doing my basic job. Because all I do on the 2 accounts I'm going to show you is copy what I do anyway. And they're all the same. All right. But just as you can see, you buy into the fund and they will give you instant funding, which is profit taking instantly. So you go in, you are immediately live. And if you know what you're doing, you're going to get a profit split for very little money that you've paid to get in. So in the case of this, it's 385 and they give you access to 10,000 in funding. Now, as long as you stick to their rules, grow that pot by 6% in 6 months, they will quadruple that to 40,000 just for your initial buy-in. So it's a quick way to big money if you know what you're doing. But it gets better because every time you do 10% thereafter, they'll double the account. So in this case, you'll go from 10,000 to 40. You do 10% of 40,000, they'll give you 80,000. Do 10% of 80,000, they'll give you 160 and so forth up to 1.2 million. So you can make a lot of money with these guys. And why do I trust them? Because I've got my money in there as well. I trade a number of accounts for them, as I say. I'll show you 2 of them that are public. I train for these guys, so I'll show them what's what. And I have faith in them. So if you want to try it, go in the description, you'll find a link and you'll get 5% off those fees. But anyway, that's a story for another day. If you're interested, email me. I'll definitely help you. So let's have a look, see what this has to say. Now, this was the first account I ever did for them. As you can see, the milestone was achieved. It's got a very good equity curve running through it. And it paid me $900, you know. And I did it relatively quickly. All right. Did 717 trades and I held my hit rate at 89% with a 3.9 expectancy. In other words, my profit factor. Whenever you're looking at figures, look at the profit factor. Doesn't matter what the profits are or anything. That's what will tell you whether the system they use is making money. Now, if it's over 1, as it says so there, you are in a profitable strategy. This particular one is 3.9. Did really well. Hardly had a blip in it. Then I've got 2 that are running now. Got one, well, I'll just show you them, doesn't matter. This one's a £50,000 account, or $50,000, whichever one you get. It's current run, had a bit of a kick in the bollocks, but paid that off because I got caught in a drop. And it's in profit. And the profit running for this month is currently 841. I've still got a bit of time to go. So that's really, I'm impressed with that. My profit factor is still above 1, even though I got a colossal kick in the balls. All right? So my expectancy is correct and it's paying me very well. And then I've got another one that I run and all I do is copy them across. This one's a £20,000 account. And again, its profit factor is 2.1. It also got a kick in the bollocks. It's a smaller account. The position sizes were smaller at the time. So it didn't dent it as badly as what the other one did, but they both held their profit factors and the equity curve is running quite well and this account is paying me 766 for this month. So just between those accounts, I'm getting paid very well. And this is aside to my wage account. So it's all about world building and being sensible. But what's all this got to do with the price of bread? Well, what it's about is really showing you warts and all. Sometimes you can get kicked in the balls, but you have to stick with a single plan and continue to work towards it. But everything I do is planned.
Isn't that logical?
And really, this is why I want to talk about targeting. Because in order to get your monthly payouts, you know, and as you've just seen, between those two, it's like $1,600. What I'm actually looking for is around maybe 1,800 to 2,000 a month out of the pair of them. And how did I get there? Well, I look for $50 a day. $50 a day equates to about $1,000 a month, which when you've broken it into its smallest part, it doesn't seem that much. You know, it's not that bad at all. And this particular, just so you can kind of see the statement, if you like, it's predominantly cable, and there they all are there. And there is pages of them over the amount of time that I've been doing this for the last sort of month or so. You know, and it's all just rattling through. You know, there's all the dates, all the figures. So it's about as transparent as I can make it. But anyway, targeting. Why have I got a bee in my bonnet about targeting this week? It's not a bee in my bonnet. Maybe that's the wrong way to say it. Well, it is. It is. Because some of the messages I get, when I'm trying to help somebody, I'll get the email through going, I'm struggling with trade. Right. Where do I go with that? You know, everybody struggles with trading, especially if you're new to it. How are you struggling? I need a strategy. Right. There's loads of strategies. Moving average cross, RSI, overbought, oversold, you know, level bounce. What do you mean? You need a strategy. They're all there. They all work. Every one of them. You know, do you know how to read a chart? No. You got any idea of how to mark a chart? No. Right. Now you don't need a strategy. You need to understand how the charts work. So that's your first bit. Your education has not got to a level where you should be even considering trading. You know, so you kind of fail before you start. But then you also get the ones who have got an idea of trading. They've got a vague idea of a strategy. And it's a discipline problem. And that's kind of why I did that discipline challenge of 1 trade a day for 10 pips. Golden shot. And it was to show that you can build a small account by grinding away at the markets. So discipline is an issue. But then there's the aimless trader. And I call them aimless because they don't actually know what they're looking for. They say, what do you want out of trading? I want some money. Yeah, I saw a video and I've kind of got a strategy. But I need the money. Well, how much money do you need? Lots of money. Give us loads of money.
Matron, take them away.
Right. Again, you failed because you're aimless. You're just kind of trying to throw enough mud on the wall to see if it'll stick. And what happens is a lot of that mud falls off. And the mud that falls off makes a royal old mess. And that royal old mess will probably cost you more than the mud that's stuck on the wall. And that's kind of why you get yourself onto a treadmill of terror. You know, and I've touched on that before. On the treadmill of terror is you're just going round in circles on a treadmill. You know, this works brilliant fails. Oh no, so I swap it into something else, that works, brilliant. Then it fails and you go back to the start and do. There's no planning. There's no destination to what you're trying to achieve. So you need an end goal, and that's reverse engineering targeting. In other words, where do you want to be and work backwards? Now, at the beginning of this video, I was singing country roads, because if you're going on holiday, you might like to go on the scenic route, on the country roads. You know, take you a long time to get there, but you will get there, as long as you know where it is you're going in the first place, a destination. But then you'll have somebody else who's gone on the same holiday, doesn't want to go on the scenic route, they want to go on the motorway. So they go up a different road. So we're all trying to get to the same destination. We're just on different paths. And that's what targeting will do for you. You need to know what your destination is. So if you come to me and you say, I want loads of money, and you show me a strategy, I can't really help you. Nobody can. And you'll have the situation where they'll be on the forums, as I was saying earlier on, banging on about they've spent God knows how much on this course, and they've tried this and they've done the other, and they've spent God knows on this indicator, and getting nowhere. So it's all fake and it's all moon landing and all that sort of crap. It's not. It's because you haven't put the work in, and you've got zero concept of planning, and that's why you fail. You know, there is no quick roads. You know, you tell me any professional that became a professional within a week. Of course you didn't. You know, I'm assuming there's a lot of you guys drive a car. Could you drive the car first time? Even though you know what a steering wheel is, you know what the brake is, you know what the clutch is, you know what the gear stick is. But could you drive the thing? Of course you can. That's why you get an instructor. You know, because there's two ways to do trading as well. You can either dive in, do it yourself, lose a fortune, or you can spend a little bit on somebody who knows what they're doing, or read a book from somebody who knows what they're doing, study, put the time in, and pay for your education. And when I say pay for your education, I mean time, not hard cash. You know, by all means, there are ways of doing it with hard cash, but time is your best commodity. And that's it, an experience. It's the only way you're going to learn, guys. So, what are we looking at? Well, it's a way to reverse engineer where you want to be. Because if you're going into the markets thinking, right, I'm going to get loads today, that's that. No planning at all.
You've got a plan. Yes. I don't even believe you have a plan. I have part of a plan.
And you're swinging for the fences, and I'll guarantee you'll get a kick in the balls every time. But if you go into the market with a plan,
I have a plan.
and a sort of time frame for that plan, then you'll have a chance. So let's have a think about this and put it into relative terms. If you have a small amount of money, you're not really going to turn that into a huge amount overnight. You need to grind at it and work at it. All right. So your time horizon, say you want to replace a wage. Now, I don't know what your wages are, but if you work on, say, a basic salary of 20,000 a year, I think 20,000 is about minimum wage. Is it that minimum wage? I don't know, actually. But all right, we'll put it another way. 50 grand a year. If you can get half of that, it's about 500 a week ish. So 25 grand a year. That's a reasonable salary, I think. You know, it's not minimum wage, but it's not over the top either. So we'll start with 25 grand. and we'll see whether or not it's feasible. So that is your starting grid. 25,000. You want to do, and that is going to replace your yearly salary now. So that means you've gone from being a full-time employee working for the man to a trader, self-employed trader with a salary of 25,000 a year. I think that's reasonable. Okay. So let's equate this into a month. What do I need in a month to give me 25 grand a year? Well, that's the next thing that I ask somebody. How long can you commit to it? They go, oh, I'll do 12 months. All right. So you've got 12 months in a year. Fair enough, actually. Spelled that wrong. Just clock that. Just clock that.
I am an idiot.
There we go. That's better. Well. That's before the spelling police get at me. Which I can't spell for shit, so it doesn't matter. Got Google for that now. Never could spell. Anyway, good with numbers though. We know every month you need 2,083. Right, so that's your starting grid. But do you actually work 12 months of the year? No, you don't. You might take a week off, whether it's for Christmas, whether it's for Easter, a couple of weeks in the summer for a summer holiday, or whatever faith holiday you have. You might take some time off. Now, personally, I work about 48 weeks a year. You know, that's probably less than that, actually. But we'll assume you have 4 weeks off a year. So what does it mean on a week? Well, it means you need to pull in 520.83 per week to achieve your £25,000 goal, because you're starting with the end goal. But then you also need a baseline. What do you do per day? Now, most of us work a 5-day week, Monday through Friday. Now, if you're Forex trading, that is pretty much the days of the week you trade. Yes, the markets do open late on a Sunday night, but essentially it's Monday through Friday. So the markets are open 5 days a week. So now you've got a baseline to work on. You know you need to pull in, well, round it up to £105. That'll give you your year's wages. So now you need to think, can my strategy give me £100 per day? Well, I don't know. Maybe. Well, what does your strategy pull you? Well, I've just done the challenge for you of 10 pips a day. You know, just 10 pips. One trade, 10 pips. So, we know I've got a strategy that I'm confident with. It's got a very high hit rate. And it's going to do 10 pips a day. Okay. How much have I got? I've got £1,000. And £1,000 is pretty high for some traders. A lot of traders might only have 500 quid. Now, I started the challenge with 300. And it took me a little while to get it up to £1. But we'll go gracing point and we'll assume you've got 500 quid. Now, 500 quid will easily open you gold. You'll be able to open cable. You'll be able to open euro, dollar. You'll be able to open the FTSE. Be able to open USJPY. Right? So there's 5 markets, key markets that can all produce the goods. You know, cable will definitely do it. I trade cable every single day. All right. So 500 quid would open me up £1. Right. Now, this is where the dynamics change. because for me to get £105 or £104.17, I need 104 pips in a day. Now, swinging for the fences is dangerous, so I know I'm not going to get that 104 pips. Why? The ATR will tell me that. If I go into the FTSE, the ATR is about 75, 80 at this moment in time. So the market's already telling you you're not going to get it. Right? So I have to do multiple trades. All right? Can't do it with just one. And how many trades do I need to take throughout the day to achieve my 100 quid on £1? It's 10. Well, it's actually 11 because you'll have to round it up. Right? So you need to take 11 trades throughout the day. That is a tall order. It is a massive tall order. So what your end goal is telling you is you're putting yourself against the wall to be bashed over the skull and put yourself under enormous pressure for something that you're probably not going to achieve. So you've heard me say in the past, it takes money to make money. Well, say you got £1,000. That means I can maybe do £2 a pip. Right, so if I'm £2 a pip. Now I have to do 5 trades a day, or one 52 pip trade. Right. 52 pips is still a tall order to pull out each day, right? But it's not unrealistic if you get on the right market, right? But it's hard. So again, what it's telling you is you're kind of setting yourself up to get kicked, all right? So what you have to start thinking is my end goal actually realistic to what I have as my pot? Well, let's just say you've got a £5,000 account, right? 5,000 will open you up a good size position. Give me a quick second.
Well, we're waiting.
Cable. I just want to see what £5,000 will open up on cable.
Are you serious?
A pound on cable is £458 to open up. So a fiver is 2,200. If you're a tenner, it's 4,500 in margin, and it leaves you 500 for the account to breathe. All right. So you can open 10 quid on 5,000. Do I recommend it? Probably not. But it can be done, is what I'm driving at. So if you were a £10 a pip, you need one trade. Just one trade. Okay. And that one trade will pretty much pay you your £100 a day. That'll give you 25,000 a year. So your account size has direct relation to where you want to be as your end goal. All right. So what you have to do is you either have to move that up or this down. All right. Now we're going to stick with 2 quid a point for now, and we're going to pull this down to where you might get to. So 15,000, still need 3 trades. 10,000, you need 2 trades. Whoops, I wish. There we go. So you might come to me and say you want 25,000, £1,000 in the account. Your realistic end goal is 5,000. Why? Because it's based on what you know. Now, if you've got a strategy that can give you 20 pips a day, then you can have your 20. That'll give you 10,000. So your time horizon for replacing your wage is not 1 year. probably 2 years. So you need to think further down the road. Okay. But once you get there, say you do have a good amount of money, you've got a 20,000 plus account, you know, you can start putting on a good bid size, because the bid size itself is what gives you your returns, you know. And it's a lot easier to go into the market and get, say, 5 pips with a high, well, you'll often hear people say that. So 5 pips, £20. It's not even a trade. It's not even one trade. Get you 20 grand. Right? I can find 5 pips at the blink of a hand. I won't even think about it. You know, very, very simple. You know, you want, oh, bugger. Just change this up into, say, 80 grand. Okay, there you go. On 5 pips, £20 a pip, you need 3 trades. That ain't difficult. Right? If you're grinding away, doing 15 pips, and you've often heard me talk about this over and over, I look for 1-2 trades a day. There's 80 grand a year, £20 a pip. Do it once. Now I do break trades up, and I do that to protect the account, because as your account grows, your risk profile changes dramatically. And every time I carve off, I reduce that risk profile. And I'll do that on another Coffee with Scruff, and I'll show you how it works in a scale. Because if you're going 100 this way and 100 that way, in other words 1 to 1, goes up 25%, you take 25% of your trade off, you move your stop up 25%, you've already reduced your risk dramatically, and you've been paid. But I'll explain that in another time, probably in the foundation videos, and you'll find that that's a series of videos of reference points. Anyway, the idea of this is to get you to think long term and break it down to what you need on a daily basis. If you're just going into the market swinging for the fences, saying, oh, I'm going to get 10 pips here and I'm going to get 20 pips there, without actually knowing what the end goal is, it's just fool's gold, because there'll be no consistency to it, and you'll find yourself in a muddle more often than not. Whereas if you have a steady plan of, right, I want to earn 20,000 this year from trading, I know I can get 25 pips every day I go into market. Okay? Whether that's 5 trades at 5 pips each, or a couple of 10 pips, or just 1 trade, whatever, you know you can get 25 pips out of the market each day. You can then look at your position size, and it'll tell you, you know, there you go. And you can break it down as to how many trades you need to make to get your end goal. I hope this genuinely makes sense. I really do, because it's quite important. It's kind of my way of thinking. I think about what I want and I go backwards. Cherish your thoughts. Let me know. If you think it's bollocks, just say it's bollocks. I can go with that. In fact, who knows? Or even tell me your ideas. If I'm wrong, let me know I'm wrong. All I can do is show you from my experience. My experience comes from business, not YouTube or the land of make-believe, what you guys call Instagram. I can hire a car, stand in front of it and say, look at this wonderful thing, you know, Trading bought me this. Well, trading's just bought me 2 wonderful cars. Really has. I'm hiring them for an entire day next month. You know, Daimler and a stretch limo for my daughter's wedding. And I got them for under 1,000. Doesn't mean to say that I'm mega wealthy. Just means I've spent thick end of £1,000 on 2 rented cars. My cars that you see, they're not brand new, but they're paid for. The house that you see me walk around in, all right, might be mortgaged, but it's nearly paid for. And the next house that we buy, that Winky and I are looking for at this moment in time, will be paid for in cash. Why? Because my salary comes from those screens. And it's planned out in such a way that I've got an end goal. So when we sell this, I'll have a lump of money left. That'll get invested into the pension. The money we've got in our savings is going to pay for the house. Why? Because I work for it. I owe nobody nothing. And that's the end goal. That was my end goal. When my company collapsed, I lost a lot. I said, there's never a day in this life will go where I owe somebody anything. So we're working hard to pay the mortgage off, and we'll be debt free. In fact, we are debt free apart from a mortgage. And that's the way it's going to be. Have a plan, have a goal, and then make that goal a reality. And you'll sleep a lot easier at night. Anyway, comment on the video, like, share, do all that good stuff. And if you are stuck, by all means contact me. I'm very easy found. All the links are in the description. If you want to support the channel and support Winky and also seeing Cuthbert's, buy a t-shirt from our Etsy shop. The proceeds go to a good cause. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.